Oh, shucks, Ron. Good morning, guys. I'm a wee bit early this morning. That's okay. I can't sit still, so I figured I would crank it up and take a look at it. How's everyone doing today? Gina, I think that was a great job using momentum, and if you managed out of that one for a couple, outstanding work on the management. A lot of waiting today, guys. A lot of sitting on your hands doing nothing today as the market sorted itself out, tried to figure out which direction it wanted to go. I took a picture of crude oil this morning for my crude oil traders. That's exactly what it looked like. Um, what's pretty amazing is not getting caught when the market's doing this, right? And for what we teach in the room, it's pretty outstanding. That's a termination. That's a termination. That's a termination. So every white square that I'm putting on this chart is an area that your rules say may stop the market. Um, and this is a big part of what we do is we're gonna focus on this. We're gonna respect these a lot, and just kind of give yourself the best chance. And this is gonna take me back to hate it when my brother is so profound, but he was on this one. He said this yesterday. Um, Try not to pay to find out what they want to do. Just wait it out. Try not to spend all your money trying to figure out what the market's going to do. Just let the market do it. And then look for your opportunities. And that's what we're going to do today. We're going to look for opportunities. We're going to focus on really a pretty simple recipe. We're going to identify those termination conditions, those areas that may stop the market. And I want you guys to see something. When this line says the market isn't going down anymore, and we end up with strong triggers, guys, there's opportunities on the way up. There's opportunities to make money on the way right to that next key area. That at this point, we sit on our hands and wait and look for the opportunities in between. And that's what we're going to do today. We're going to talk a lot about areas that may stop the market. We're going to talk about areas breaking, support, breaking, pulling back, acting as resistance over and over as this market goes down. We're going to talk about using these pivot stop outs, Fibonacci resistance, Fibonacci support, and we're going to put it all together to create a statistical advantage for you. We're going to put it all together so that you can understand some very key concepts through your chart reading. But before we do that, always checking news, guys. Always making sure that we're not trading into. Um, I like that, Gary. Making sure you understand when the news is coming, guys. We don't trade the news. I don't trade the news. I don't care what the news says. I'm not going to lie. But what I do care about is whether or not it's going to create a reaction. And it's not going to create a reaction in me because I'm just not worried about it. But it may create a reaction in the people that control the market, the deep pockets guys. They may be waiting for employment cost index and then making a decision based off of it. So when you have these medium impact, these high impact, it can really make a market move. We are right in the midst of some medium impact. I'm not sure what it did, if it did anything. 9:45, we have Chicago PMI, and then at 10 a.m. we do have high impact. High impact can create a bounce or a spike. It may make the market simply too fast to read to look for your rules. So every morning I'm checking news, cheeseburger news at 10. Um, and then everything that I talk about is going to come from the education page. It's important for me that you guys know this. Michael 266, welcome to the room. I was looking for you yesterday. We have been anticipating your arrival. It's nice to have you with us here at Nexgen. Reminding you guys that this class is your class, that this class is as good as it is because of the questions that you ask. And I don't want you to ever sit on your hands thinking that maybe you shouldn't be asking a question. Always, anything you're thinking, drop it in the room. If I don't have the answer, I'll find the person that does, without a doubt. We're going to talk about two types of trades today. We're going to talk about a high probability trend trade, and this is going to be your foundational trade, guys. This is learning to read a map before you go sailing around the world. A high probability trend trade is defined as when each indicator on every chart lines up for the trade, when the triggers are the strongest, when there's nothing in the way. Those lines that we saw on the chart that were holding the market, stopping it in its tracks, we're going to make sure that those aren't present. And nothing between you and your targets, guys. Make it easy to make money. And then your high probability trend trade is going to give you this unbelievable skill. It's going to turn you into a chart reader. You're going to be able to look at your charts and you're going to understand where the market is likely to continue. And this will become your entries for high probability trend trades. You're going to understand where the market is likely to go as you work on your management, looking for larger moves. And you're going to understand where the market is likely to stop. And those are those termination conditions. And those likely to stop areas not only keep you from taking trades into an area that may reverse or create a bounce, but they also act as the anchor. When you have a termination condition, one of these lines on a chart, reverse the market and get you those rules met. Next-gen users pinpoint their entries at these beautiful spots to capitalize on all the momentum and that reversal that's created. And this is our focus today, is that high probability trend trade. This is the one that's going to lay a foundation for you. It's going to turn you into a chart reader. It's going to give you the ability to understand what the indicators are telling you. Rather than hoping or guessing or wondering what's going to happen, you can actually read what is happening in the market and then use those for the high probability trend trade. Your ability to read charts that's developed in the high probability trend trade is going to take you to what we call a medium probability trade. And this is defined when most of your indicators line up for a trade. However, a small issue exists. And truth be told, guys, this is going to be the majority of your trades. And when you're executing these medium probability trades, you're going to take these trades and manage them assertively. And your ability to read charts will allow you to do that. You're going to recognize trouble in your way. Once again, chart reading giving you that skill set. And you may take a portion of your positions off at the trouble spot, get to a zero loss level, and understand that base hits still score runs, to use a baseball analogy. But we're going to focus on the high probability trend trade first, guys. And this is three rules. And these three rules each create an advantage. And in order for a trade to be considered high probability, you must have each of these advantages present. You must have strong triggers, creating the advantage of momentum. You must have none of those termination conditions, no areas likely to stop the market. This will provide you a clear path, nothing between you and your target. And then we're going to use an entry area that's going to allow you to reduce risk, that's going to allow you to maximize your profit potential. And these three advantages create a trade. And these three advantages are going to come to be on only two charts. Remember, simplicity is the key in the beginning, guys. Don't think about too much. You don't have to. Your large chart is the overall consensus of what the people in charge want the market to do. Your large chart is a slower, broad stroke of a brush, and you're going to be able to define direction, momentum, areas. All of this happens in just one bar. One bar on a large chart is going to give you all this information. Your first two out of three rules are going to happen on that large chart as well. And when rule number one is met, those strong triggers are true, it's going to give you the advantage of momentum. And when rule number two is met, when there are none of those lines that may stop the market, you will have a clear path. And when you do, you'll turn your attention to the small chart. And the small chart is a refinement tool. That's all it is. What happens in just one bar on the large chart literally happens in 15 to 30 on the smaller, faster chart. And on the smaller chart, you're going to pinpoint where the market is likely to continue so accurately that you'll use a limit order to let the market come back to you, to enter the market. And this is going to allow you to reduce risk. It's going to allow you to maximize your profit potential. And that's rule number three, giving you that advantage on a smaller, faster chart, that refinement tool. And the two charts work together. I love this picture because it kind of sums up why we do what we do here at Nexgen. Because the large chart is the large crowd. These are the people that move the market. These are the guys with the bottomless pockets and the endless supply of cash. And when they say the market goes up, guys, it's going to go up. And when they say it's going to go down, it's going to go down. And then we're going to let them define that trend. We're going to let them establish momentum in the market. And we're going to make sure that they're not hitting any of those areas where they may react. And then this smaller, faster chart, there's these group of people that love to fight the trend, that love to fight momentum, that never sat in my classroom. And they create this little push, this fight against everything that's going on. You are going to be able to take advantage of what these guys do and wait for the market to come to you and enter it with the least amount of risk and the highest amount of profit potential. And you're going to do it through only three rules. Three rules creating three advantages, guys, and it all starts with strong triggers. Everything on the large chart begins with the strong triggers because strong triggers create momentum. And momentum is an outstanding thing to have when you're looking to get in the market. So before we do momentum, I want to remind you that we are trading with the trend. It's the only way that you can trade with momentum. It is impossible to have rule number one met if you're fighting the trend. So if the background is green on your large chart, you're in an uptrend, you're only looking for rules to be met for high probability trend trades long. And if the background is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trade short. And let me show you just how easy that can be, guys. This is the S&P. My background is red. I'm only looking for rules to be met for high probability trend trade short. Over here on crude oil, my background is green. I'm in an uptrend. I'm only looking for rules to be met for high probability trend trades long. And it certainly doesn't mean that there is a trade in the moment, but this little bit is going to help keep me safe and keep me on the right side of things. And then once I've established the trend, I have to make sure that I have strong triggers. I want to make sure that the odds are favorable for the market to continue in the direction of that trend. And I do that with this little relationship between the small triggers, the two solid lines, and the large triggers, these dashed lines. These work together to give me that information, that strong trigger look. When the small triggers break above the large triggers, space is created between the two. The bigger this gap, the stronger the momentum, guys. And this is your strong trigger line defined. And when I have strong triggers, the odds are favorable for the market to continue in the direction of the trend. Good morning, Dwight. And odds favorable momentum is one of those phrases that you're going to hear in the room a lot. Odds favorable momentum is going to be the driving force behind a lot of trades that you see that more experienced users are taking and finding a lot of success with. In a downtrend, it's the exact same look. Small triggers below the large triggers. The large triggers are wide. They're angled in the direction of the trend. Guys, flat triggers mean flat momentum. There's nothing going on. So you want them wide. The space between the two lets me know that the odds are favorable for the market to continue down. That odds favorable momentum is the first advantage that you're going to give yourself looking for these trades. And when you have it, that's when you'll use that smaller, faster chart to refine the broad stroke of a brush. On a large chart, you'll see these bars that have tails or wicks on them. Those tails and wicks are pullbacks on that smaller, faster chart. That's that refinement process and what it looks like on a large chart. We're going to use these to study historically to develop trust in the methodology, but you guys are literally going to be able to pinpoint right where that tail is likely to happen. That's going to become your entry for the highest probability trend trade, and you'll be looking for that entry until the small triggers work their way back inside of the large. And that's what we call a weakening of the large trigger lines. And when you have that weakened large trigger line, anything can happen up or down. Your advantage of momentum goes away. And this is where you see an awful lot of reversals in the market. This is where you'll see price coming into those key Fibonacci areas, but you'll be able to visually see it through that weakening of the large triggers. Good morning, John Novak. So there's your look. Is everybody good with that? Michael, you okay with that? Happy Halloween. I keep forgetting it's Halloween. My kids are grown up. Strong triggers, odds favorable momentum, and it doesn't happen every second of every day. Sometimes we've got to be a little bit patient. One of the things that becoming a chart reader teaches you is that 90% of your day is spent reading your indicators, waiting for advantages. Going left to right, awesome, very good, Michael. Strong triggers push the market down until we weaken them, and there's that anything can happen look. It's a great way to annotate it on your charts as you're learning to read these indicators. ACH lets me know that anything can happen, and sure enough, the market reverses, even without the benefit of Fibonacci there. It creates odds favorable momentum. There's one of those tails, one of those pullbacks. This is where you guys are getting long and looking for that opportunity to ride it out with the momentum right until it goes away again. Anything can happen, returns, and the market reverses once again. And you see this a lot. Creates odds favorable, gives you an opportunity. And then we get into what I believe is one of the biggest advantages Nexgen provides you through the rules. You find this area where it's a bit of a transition. There's no agreement. There is no odds favorable momentum. The colors don't line up. The triggers don't line up. And this is where a lot of people, especially you experienced traders, will probably be like, yeah, I've done this before, where you begin to predict, is the market going to go up? Is it going to go down? I'm going to take my shot at this. And maybe I'm going to take my shot at it 5 or 6 times and blow out for the day and have to go finish my day off. Or you can embrace the idea that rule number one gives you that advantage. It really does push the market in the direction of the trend. And you can sit on your hands and wait rather than predict, because eventually one of these guys is going to win. The buyers or sellers is going to come out on top, and they're going to give you that odds favorable momentum. So rule number one, guys, everything about it is designed to keep you in a market likely to push in the direction of the trend. And if I go back to the live market again, you'll notice that odds favorable, there's one of those tails and it pushes down, odds favorable and it pushes up, odds favorable and it pushes down. And the one thing that we haven't talked about yet is termination conditions. And this is a market that's caught in consolidation right now. You can see it from fib to fib to fib to fib. And rule number two is designed to keep you safe. But rule number one, I want you to see this. When a termination creates odds favorable momentum, there's one of those tails pushing you up to the next key area. This is something that happens on every chart, guys. Odds favorable pushes up, odds favorable is pushing down. We see it again with that strongest trigger look. Resistance breaks, it pulls back as support, the market continues. Over and over, guys. Look at the tails. And these are what are creating your advantages. Resistance breaks, it behaves as support. We're looking for momentum. But it all starts with that odds favorable. That small below the large. Both are wide, both are angled in the direction of the trend. And sure enough, this market is pushing down, but it's pushing down right into one of those blue Fibonacci support areas. And we're about to see why this takes away our clear path. And it does it with rule number two. Rule number two says that termination conditions must be false. And when they are, you have that clear path. You have nothing between you and your targets. And to determine, I always say that and it always sounds so odd, to determine a termination condition, um, it's a simple comparison. It's a comparison of trigger lines, the same trigger lines that give us momentum, and those key areas, those lines on your chart. So first, let me give you the lines that we're going to look at. We're going to look at divergence high lines, for those magenta lines that print from pivots where there's a loss of momentum. We're going to look at divergence low lines, cyan lines that print right off of a pivot, letting me know that the momentum is not following the price. We're going to look for red Fibonacci resistance, blue Fibonacci support, yellow one-to-ones. And the amazing thing about these areas, guys, is you're going to know about them long before you get to them. Sometimes hours before you get to them, you're going to know that it's a key area. And the reason we respect these areas is because this is where decisions are being made. This is where buyers are buying and sellers are selling. This is where profits are being taken by the people that move the market, that keep things going in the market. And we can avoid getting caught up in their decision-making process through recognizing termination conditions. And it happens when price reaches one of these decision-making points, when it reaches Fibonacci support. In this case, all you have to do as a brand new user is ask yourself, where are my trigger lines? If they remain above this area of support, this area of support's behaving as a termination condition. It may create a bounce in the market that becomes untradeable. It might reverse the market, or it may break. And I think that one of the biggest advantages that you can give yourself is to just simply admit that you don't know. You don't know if it's going to be a one bar bounce, if it's going to be a full reversal, or if it's going to break. If both the small and the large get to the other side of an area, we're going to consider that area broken. So down here in the moment, price reaches, triggers remain above. Let's sit on our hands and wait. And then at this area of support, both small and large get through. Well, now this area of support begins to act as resistance. And you'll notice that there's odds favorable momentum. And there's one of those tails. There's one of those potential entries where you guys are going to be able to capitalize with that momentum as well as that clear path. And in the beginning, we're going to keep it pretty simple. We're going to focus on two options. And this is my is it broken slide. If price reaches an area, whether it is Fibonacci resistance, support, yellow one-to-ones, divergence highs and lows, if price gets there and none of your triggers are capable of getting through it, just pause for a moment. Give yourself just a second, refill your water, take a deep breath, because it's either going to reverse the market, it's going to create an untradeable bounce, or it's going to break. So no triggers, no clear path. Small and large triggers get to the other side of the area. Now the path is clear, and this is where you can resume looking for that best of the best trade. This is where you can say to yourself, now there's nothing between me and my target. My path is clear, my momentum is the strongest, and there's one of those tails. There's one of those pullbacks right to the area of support that used to be resistance until the trigger lines got through. As a brand new user, these are your two options for the highest probability trend trade. One gives you a clear path, one gives you a moment to pause. As you grow with the software and you work into that medium probability trade that we talked about, you're going to recognize through momentum and trigger location when areas have the potential to break. And this is what we call a 50-50 look. And it's a 50-50 look because your small triggers have broken through the area. Your large triggers have not. 50% above, 50% or below. You could call it a straddle trade if you want to, a one above, a one below trade. But what it means is that with all this momentum, this area has the potential to break. But because small and large haven't quite made it to the other side, you do not have the advantage of a clear path, which means that all three advantages are not present, which means that we move into that medium probability scenario. And when you have that, it's imperative that you don't sacrifice more momentum or the best of the best entry area. And we're going to talk about both of these trades today, but your foundational trade is identifying those termination conditions. And you're going to do this for two reasons. One, it's going to keep you from going short into those termination condition lows. And the second half of it is if a termination condition creates a full reversal, it's going to be a strong bottom. And the strong bottom is the precursor for the highest probability trend trade that you can take, for the trade that typically wins 70 to 80% of the time. This is a great picture of termination conditions at lows, reminding yourself the recipe price reaches. No triggers, no trade. Of course, I have the same picture. Whoops, that's not it. Termination conditions at highs are somewhere in here. There we go. Price reaches that line, triggers remain below, absolutely no long trades into it, and if it reverses the market, we are going to call it a strong top, and a strong top is the precursor to the absolute highest probability trend trade that you can take. But you've got to be able to recognize these areas first. So let's take a quick look. Price reaches Fibonacci resistance. Absolutely none of the trigger lines break through. This is your cue to not go long into that red line. And it pushes all the way back to Fibonacci support. Once again, you ask yourself the simple question, where are my trigger lines? If none have broken through the area of support, you're in a moment of pause. You're not going long into resistance. You're not going short into support. 90% of your day is simply just waiting for advantages, guys, waiting for the absolute best of the best. Well, support does exactly what we anticipate support to do, and it pushes us back up to one of those divergence high lines, creating that pivot stop out. It pushes us to resistance and a second level of resistance. Three termination conditions in the same spot's pretty powerful. When it creates a reversal in the market, meaning that those green triggers, the large triggers, go from green to red, small triggers are below the large, they're both wide in the angle of the trend. Guys, that's momentum. We hadn't reached support, we have a clear path, and there's one of those tails. This is where next-gen users are looking for their best of the best, that high probability trend trade that typically wins. We're using terminations to create a reversal to give us odds favorable and a clear path, and this is where you're going to capitalize as a new user, pinpointing that entry and just being patient, waiting for those conditions to come together. And this picture has a lot of information. I want to save it and give it to you. Odds favorable momentum all the way down. Let's make that a little easier to see. What do you say? We'll do it hot pink. Odds favorable momentum all the way down in this downtrend right up until you hit Fibonacci support in the form of yellow 1-to-1s. Next-gen users are asking themselves, where are the trigger lines? And the answer is clearly they are above the 1-to-1s. Therefore, there is no trade into this area. Even with that momentum, it's likely to stop or create a bounce. And that's exactly what happens, guys. Decisions were made here. The sellers were in control, but the buyers reacted at Fibonacci support right there in those yellow 1-to-1s. But the sellers weren't done. And notice that your small and large don't agree. We're not exactly sure what's going to happen here. The buyers fight, the sellers fight back, the buyers fight, and the sellers fight back, guys. This is your 90%. This is where your rules are not met. And if you train yourself to sit on your hands and do nothing when there's nothing to do, ultimately this termination creates a full reversal. Large triggers go from red to green. Both small and large triggers get above the area of resistance. You'll notice that it's now behaving as support. Smalls are outside of the large, and there's one of those pullbacks, one of those tails. And next-gen users are getting long right here from the termination that creates the full reversal. There's your pullback, and this is the one that's going to help you hit that daily goal. This is your highest probability trend trade, guys. This is taking advantage of the momentum, the clear path, and then letting that small chart get you in at the best of the best area. These are terminations that align, guys. These are using lines on the large chart to determine whether or not the market is likely to stop. Resistance, no triggers through, reverses the market. Directly into support, look at the untradeable bounce. All the way back up to resistance. The fight is on between buyers and sellers. And then, of course, crude oil has just put on an absolute clinic today on how powerful termination conditions can be. Guys, there's something going on in crude oil. There is such a fight between buyers and sellers, and next-gen users don't have to get caught in it. Support, 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 support. Triggers aren't through. The same with resistance, guys. Let's sit on our hands and wait. One of them are going to win eventually. We'll be waiting for them with rule number 1 and rule number 2 when they are, but let's go back to the S&P. Strong triggers break things. The smalls are beginning to break through. The momentum is the strongest, guys. We're just in a holding pattern, waiting for those advantages. Is everybody cool with termination conditions, using the lines, identifying where the market is likely to stop, not only as a big waving red flag to keep you out of that next trend trade when the trend may end, but also as an anchor for that highest probability trend trade? Guys, these are important. Understanding termination conditions is going to keep you out of a lot of trouble. Sometimes the market turns from nowhere, whether it has odds favorable momentum and no areas hit, or even with weaker triggers and a clear path. The market seems to turn from nowhere on a large chart, and there's not a lot of indication because it's such a slow chart. This is the only termination condition that I'm going to look for on a small chart, and this one doesn't use lines. This one uses divergence, and divergence is a loss of momentum. When price comes down and forms this pivot, if the momentum doesn't follow, the cyan line prints. Same thing from the top, but it's magenta. Little color coding going on. 3 divergences or 3 losses of momentum in the same price range may terminate the trend, guys. It may push it up further. It may completely reverse it. It may be a confirmation tool of a little bit of overrun. But 3 divergences in the same location is your visual cue. No more short trades in the moment. It becomes more powerful when your small triggers work their way inside of the large, when you have that anything can happen look even on a small chart. And it becomes more powerful still when that third pivot is higher than the previous from a low or lower than the previous from a high, creating a little head and shoulders pattern, letting you know that not only could price not exceed the previous pivot, but momentum is still failing. And these are where you see those pushes up. And you'll see this look at a low or this look at a high very often when your large chart appears to just be turning out of the middle of nowhere. Maybe those areas aren't reached yet. That small chart's going to help you see it. And then on those medium probability trades, three divergences is going to be your cue to get out. Maybe you took the perfect short. Maybe everything said the market was likely to continue. But if three divergences print on your small chart, you know to capture profits, to get out of that trade, to keep the powder dry for the next trade. So it becomes not only a termination condition, but also a management opportunity. And you'll see just how often these termination conditions do hold the market. But when we have a termination creating a full reversal, when we do get that momentum and we see these tails, you guys are going to be able to pinpoint right where that long should be coming from. And you're going to be able to do it on that smaller, faster chart. We're going to change direction. We're going to let the large chart, it will have established the trend, it will have established the momentum, and it will have established the areas where those reactions may happen. When your first two advantages are present on this chart, when you have momentum and a clear path, we're going to let the small crowd do their thing, guys. We're going to let them give us a pushback to an area inside of favorable large triggers. And that's rule number 3. You're going to use a limit order. You're literally going to wait for the market to come to you. And you're going to have that limit order waiting at an area. All high probability trend trades happen at a line. Whether it is Fibonacci support or resistance, yellow one-to-ones, or a mid-band, that is where your highest probability trend trade originates. And we want those lines to be inside what we call favorable large triggers. And favorable large triggers mean that both your large triggers, those dashed lines, and your synthetic triggers, which are just the large triggers from your higher time frame, when they are one on top of the other, wide in the angle to the trend, like two snakes riding piggyback, guys, this is your best look because when they're this tight on top of each other, there's not a lot of room for lines to fall inside, which means that your window of opportunity, that point where the market is most likely to continue, is the absolute smallest, which gives you the absolute least amount of risk, which gives you a very decided advantage. So let me give you guys this picture. And again, as you grow with the software, you're going to recognize times where it's okay to not have them so tight with one another. But as a brand new user, I want you with the best of the best. I want you to have the perfect entry because the perfect entry creates manageable trades. And this is going to be your look when the large chart says go. You've made the decision that it's time to take a trade because those first two advantages are in place. Your small chart should have strong triggers. They should be separation between the small and the large. Your large and synthetics should be favorable. They should both be up, angled in the direction of the trend. And you're just going to identify, I've got fibs, midbands, and yellow one-to-ones all in the same area as my favorable large triggers, but I need that small crowd to initiate a fight. I need that small crowd to go against momentum, to go against that clear path. And that happens with a reversal bar. This red bar after all of the green bars lets me know that the fight is on. Good morning, Safia. And when the fight begins, you're going to create your window of opportunity. You're going to create the opportunity to understand where the market is likely to continue. And for a long trade, it's going to extend. Let me show you this picture. From your highest point of support to your lowest point of support inside of favorable large triggers. And then for a short trade, it's going to go from your lowest point of resistance to your highest point of resistance, once again, inside of favorable large triggers, which means that these areas beyond the large triggers are of no concern to us. This area of support below the large triggers is no concern to us. We're looking for the areas that fall within. So we're going to identify the reversal bar. We're going to look for the areas and we're going to create a window. And once the window is established, a limit order is placed at the highest point of support for a long or the lowest point of resistance for a short Because remember that your large chart has odds favorable momentum, and your large chart has absolutely nothing to create a bounce. So the expectation isn't that this market is going to push too much, that that small crowd's not going to get the best fight. And your job is to enter the market at the highest point of support inside of favorable large triggers, which happens to be this midband, tick or two above. But the window extends to the lowest point of support inside of those favorable large triggers, all the way down to these yellow one-to-ones, which means that if we've created a window, it makes sense that the market may push to the bottom of that window. And I want you to be ready for this because it means that you have to see a little negative equity. It means that you have to see a red number on your P&L. And this is scary for new users, but remember that this is a small chart. All of these bars are happening in one bar. Good morning, Snorri. And one of the amazing things that we do is we manage our risk before we ever manage profits, guys. And we do that through the window of opportunity, through the advantages of momentum and a clear path. And you guys will be able to put a protective stop 2 or 3 ticks below, 3 or 4 ticks below that window of opportunity at the point where the market shouldn't go. Because if it does go beyond that window, we're going to catch it with a stop and we're going to exit that trade and we're going to remind ourselves, and this is such an important part of being a day trader, is that anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. I have never had a day, even with my goals met, where there weren't losses on the chart. I've never had a day where it was one of my best days where there weren't losses on the chart, guys. And this is just a cost of doing business. But the idea is that as a brand new user, you're developing trust. You're developing recognition. You're developing the ability to identify these conditions at a moment's notice, to take this best of the best entry, and to be willing to put yourself in that kill zone, to be willing to lose a trade every now and then, and to never miss the entry. Because you know through study, through repetition, through your own simulation, that this is in fact a pattern that typically wins 70 to 80% of the time. So we're not grading this trade on the one trade. We are grading this trade on 20 trades, 25 trades, understanding that for every 10 trades I take, I'm likely to lose 3, and I don't get to pick which 3. So this is where the first few weeks with Nexgen is imperative, that you focus on this best of the best entry, getting in with the statistical advantage, giving yourself confidence through the memory of success, and understanding that these 3 advantages create a trade for the brand new user. And when you give up one of these advantages, it goes into a medium probability scenario that your ability to read charts is going to guide you through. Travel the world, I saw you jump in here. Welcome to the room. Nice to have you in my class. And the cool thing is, guys, is when it comes back and it bounces off of support inside of favorable large triggers, gives us a reversal bar, you're going to reduce your risk even further. You're going to get it up below that reversal bar. And this is the one that I never miss because 70 to 80% of the time, it's profit target reached. Let's see if we can find a high probability trend trade here on this beautiful Tuesday morning. There was that little bit of indecision before news, wasn't there? Let's go back to 3:46 in the morning and see what it looked like. And guys, that is darn near perfect. So let's go through an entry real quick, and then what I'm going to do is I'm going to give you guys a couple checklists, and we're going to get to the live market. But I want you to look at it like this first. Take everything off the chart. Let's look at strength, because strength has to lead the way. And with this strength, your advantage of a market that's likely to go up goes up exponentially. And notice the tail. The tail, this is your study tool, guys. This tail pulls directly back to support inside of favorable large triggers, guys. This is your best of the best. This is the highest probability trend trade. This is the advantage of momentum, the advantage of a clear path, and being able to pinpoint those areas inside of favorable large triggers, keeping your stop outside of that window of opportunity. and taking advantage of everything for the market to continue up. Does that make sense to everybody? There's your look on the live chart. Let's do this. Let's take off our little cheater circle. Everything says up, the path is clear, everything is amazing. I look at the small chart and everything's going up without me, and I have a moment of panic, but I remember that the small crowd is there and they're going to force a pullback. And at the time of that reversal bar, I'm going to take a drawing tool. It makes my life easier. I'm going to identify from the top of my triggers to the bottom of my triggers, and I'm going to refine it even further to the highest point of support, to the lowest point of support inside of favorable large triggers. And this is where the market is most likely to continue. And watch what happens. Right to the mid band, get a little bounce, stays inside of the window, and then it just runs, guys, right off to Fibonacci resistance. This is something that happens every day. This is a trade that happens so often that we've built a trading plan around it, that we have made it so that you can study it through circling those tails when the rules are met. There's a pullback directly to Fibonacci resistance. There's a pullback directly to Fibonacci resistance. If I scroll back a little bit more, sometimes there's not an opportunity. Ooh, some days there's not opportunities at all. And then off it goes. So your goal as a brand new user is to identify odds favorable momentum. Your goal as a brand new user is to identify that clear path. And when you have both, you're going to turn your attention to a smaller, faster chart. You're going to look for those areas inside of favorable large triggers, and you're going to get to a point to where you simply say, this creates a statistical advantage. I'm going to take that trade. And you're going to take it win, lose, or draw. And when you take it, you're going to get to the second half of your first 20 days, guys. And this is how you're going to become a confident trader. Posting pictures in the room. I want you to take a picture of everything you do. I want you to take a picture of everything that you see. If you look at a chart and you're like, I don't know if this is odds favorable momentum, I want you to take a picture and post it in the room. And I want you to write on that chart, hey, Mark, is this odds favorable momentum? Am I looking at a termination condition? Am I following rule number 3 correctly? Because I'm here 15 hours every week. I'm here live. And honest to goodness, every time you post a picture, it's a private session. So Safia posted this picture in the room. Safia's got a different plan than you. She also has ginormous pictures. But Safia has a plan that says when everything is going down and when her path is clear, she'll look for, no, I think it was me. She'll look for an opportunity to break an area and find an entry and take quick profits. It's the same concept that we talk about, the idea of a clear path, the idea of momentum. She's just taken a little different approach to it. She's allowed her chart reading to develop a plan that suits her needs. And it's pretty awesome because those are the trades that make her feel good. Those are the trades that she recognizes. Those are the trades that she has 100% confidence in because of her study. And she did that through posting a million pictures in my class. Had to look at everything that she was doing and take it out and recognize patterns with her. And now she's going to teach this class starting next week. I haven't told her yet, though. And then the second thing to do, and this is such a big part of what you do, is use the spreadsheet that Nexgen provided you guys. Nexgen has given you this spreadsheet, and what the spreadsheet is it's your trade journal. This is everything that you do every time you pull the trigger. But the cool thing is that every time you take a picture, you put it in there, you annotate, you write on a chart. You dictate the reasons that you get into a trade. You show your large chart, your small chart, where you entered, where you exit. When you begin to create this education path for yourself, when you begin to use these pictures, not only in the room, but also in your spreadsheet, you're going to go back every morning and you're going to say, what did I do yesterday? What brought me success? What didn't? What robbed me of success? Maybe I was trading in determination conditions. Maybe I didn't have the advantage of momentum, or maybe I was just kind of jumping in because I had that fear of missing out and it created unmanageable trades. But what's going to happen is when you take a look at these things tomorrow morning and you read the notes that you have on the chart, it's going to set you up for the day. It's going to have you focused on the best of the best. It's going to have you focused on the patterns that provide success and the patterns that are taking them. And then, guys, what I really think one of my gifts is in this room is I begin to recognize patterns in you. I begin to recognize the things that seem to come easy to you, the things that seem to create problems for you. And we literally have these conversations each and every day to nudge you in the right direction, to get you on that path of success. But using the spreadsheet is imperative, filling up that first sheet. And then as you start taking pictures, recognizing these great entries, put them into your spreadsheet. Create recognition through repetition, guys. The more pictures you take, the easier it becomes. The more you participate in class, the quicker you're going to get to where you want to be. And then just for study, I have about 270 pictures of clients doing their thing with momentum, with areas inside of favorable large triggers. Some of these are high probability, and some of these are those 50-50 medium probability. But this is 270 educational opportunities for you to look at what can be done with the software, to really get in and study and understand. I've also added things about the NASDAQ that I've found helpful. News in 2 minutes. Thank you, Safia. Beginning to learn how to manage trades, patterns that we see all the time in the market because they do repeat themselves. And then a whole section on terminations because this was lovingly referred to as the Mark Novak section. Because, guys, my pattern that I discovered through my spreadsheet, but more importantly, my pattern that I discovered through posting in my brother's classroom each and every day as I learned the software was that I had an affection for trading into these lines that may stop the market. And he worked with me and he gave me some plans to work around that to get better. And now I'm teaching you guys how to read indicators. So if it works for me, it works for anybody. So we learned the trigger lines. We looked at the rules for when it's okay to trade. Let's get on those simulators and let's pull the trigger every time we think we see a trade. Annotate the trade. Post it in the room and let's talk about what you see, what you're doing. The idea is that you want to practice the correct rules because if the rules are wrong and you still win, it may be a short-term victory. It feels good in the moment. But the reality is you're creating this long-term failure. You got lucky, and luck is a horrible trading plan. And the second you go live, we find that luck tends to run out. We're going to simplify very much. I'd like you to focus on the entry for the high probability trend trade. Don't even worry about the management. Just get in at the right spot and post that picture so that we can refine it down to the best of the best. And then it becomes a manageable opportunity. You have to learn the looks so that they're easy. You have to know what you're going to commit to. This is where the spreadsheet comes in, guys. Every time you post a picture, here we go, perfect short look. It is odds favorable momentum. It's a clear path, and it's an entry inside of favorable large triggers. And that is exactly what I'm going to look for every time I look for a short trade. And the perfect long trade is odds favorable momentum and a clear path and a pullback to support inside of favorable large triggers. And this will be what I look for every time. The most successful traders that I know take the same darn boring trades every day because they create a statistical advantage. So I put a copy of my spreadsheet in there. I want you to steal it. I want you to click and drag, download it, get it onto your computer. Go look at what people are doing. I'm also going to give you a high probability trend trade checklist. And this high probability trend trade checklist is designed to keep you focused on the advantages. It's also designed to give you the ability to know what to write on your chart when you see them happening so that you can create this correlation between the rules, the words that create the rules, and the looks that line up with the words. And what this is going to do is it's going to have you focused. Oh, yeah, that is odds favorable momentum. And that mention of odds favorable is going to create confidence. And you're going to say, this is a clear path. And that's going to create confidence. And you're going to say, absolutely, this is an area inside of favorable large triggers. And it's going to create confidence and trust. And guys, I'm going to tell you right now, it takes about 30 days to really trust it. It takes about a week to recognize it, couple weeks to practice it, get feedback. But it's not uncommon, and I see it all the time. People in this room, brand new to Nexgen, following this simple plan, getting funded on those prop firms, trading other people's money within the first 30 days because they've stayed simple and focused. And this checklist is going to get you in that direction. And then I'm going to give you the exact same checklist, but it's going to have pictures stolen from the resource material. What is a good top or bottom? Well, it's very simply a termination that creates a full reversal. This creates your advantage. There's the advantage of momentum, both long and short, and there's the absence of that advantage so that you can recognize between the two and stay focused. Here's your recipe for termination conditions as well as a clear path. And then as you grow with the software, that's how you're going to get into those areas likely to break with the potential. And then a beautiful visual to have you identifying where the market is most likely to continue. Guys, both of these checklists are designed to bring you confidence and success. They're designed to keep you focused on the best of the best. They're designed to give you a statistical advantage every time you enter the market. And then you're going to have to go back and learn to trust these guys. And that's where we circle those tails. This is where you can go back historically. And I want you to do it with a little anger in your brain, saying, I think Mark is full of beans. There's absolutely no way this happens every day on any market that I'm looking at. So I'm going to go back on 2 or 3 markets every day and I'm going to circle tails when the rules were met. And I'm going to see if they line up with those areas inside of favorable large triggers. And sometimes they will and sometimes they won't. But if you spend the effort to go back and do this historically and go through this drill to create recognition, I guarantee you right now you'll be with me for the rest of your life. You're never going to leave Nexgen because you're going to realize that this works. This is the best software. You just have to learn to work it. We don't trade tails. We trade pullbacks to areas. They end up looking like tails on a large chart. That's what allows you to study. That's what allows you to go back when the market isn't moving, when everything is calm. It gives you the ability, man, I got a lot of stuff open, to watch a market pull back to resistance, right? And then 3 divergences might end the party. And that's enough to let you know. And over here, support breaks. Everything is down. The triggers are strong. And I'll be darned, it pulls right back to resistance, right inside of favorable large triggers, and the market continues to push down. Over and over, guys, every day. All you have to do is learn how to take advantage of it. So I've put both of these in there. I've put both spreadsheets in there. Um, you've got pictures of the rules. You know how to study them. And now all you need is this little commitment to start working on a plan. Giving yourself a concrete set of rules to get you into the market. And that's what I'm going to give you now. And this is our first hour every week, guys. Every day is reminding you the advantages, and the second 2 hours revolve around looking at the pictures that you post, reading the live market, talking about anything and everything that you want to talk about. So if you have questions on the high probability trend trade, make a list, post them in the room. Let's get every one of them answered. But this KISS plan, the Keep It Simple Sunshine plan, is designed to be a stepping stone in your learning journey. It's designed to optimize your chances of success with the high probability trend trade and that 50-50 trade, that medium probability where the area has the potential to break because of all that amazing momentum. But it's going to be through simulation, study, class feedback, and continuous practice that you'll be empowered to craft a plan tailored to your personal goals, but it's going to be based on your experience reading the indicators. The more times you ask why, how come, what is this, the more experience you develop. And the more experience you develop, the easier it becomes to recognize these great things. So this design is your stepping stone. This is going to make you a chart reader. This is the one that's going to teach you how to use Google Maps so that you can get to your destination. It all happens with defining your entry. And your simple plan for consistency starts with never fight the large chart direction, guys. Never fight the large chart triggers, because when you do, you may as well throw your wallet in a crowd and say goodbye to your money, because the large crowd is defining both of these. And this little bit, never fight the large chart direction or triggers, is designed as a safeguard, and it'll eliminate literally 50 to 60% of the losers that new users typically take. So you're going to define your entry. You're going to do it with the high probability trend trade checklist, and you're going to start taking pictures of that entry like you're getting paid to do it, guys. 15 pictures a day, commit. 15 pictures a day is 75 pictures a week, guys. It's 300 pictures a month. And at the end of 90 days of study, you should be looking at over 900 pictures of rules-based trades. And it's that recognition through repetition that's going to give you the confidence to take these trades. You'll have it before the 90 days, but you're just going to keep getting better. The education process never ends. This entry is methodical, it's pragmatic, it's emotion free. It doesn't revolve on hopes or wishes, it revolves on advantages, statistical advantages every time to get you into that market. And then as you learn to read your charts, your management should be just as mechanical as the entry because you're learning to read the charts. You're learning to get to the point to where you can manage these things in the moment. But until you can, let your management plan be a series of if-thens that remove emotion. If I take the perfect entry right at the area inside of favorable large triggers, then my initial stop is outside of that window, 4 or 5 ticks beyond where the market is likely to continue. And at this point, there's nothing to do for you guys. You're in it, you're either going to get stopped out, and that's a normal part of a positive equity curve, or all those advantages are going to come together. Hold on, let me just brag for a second. Nice trade, Paul. Paul just hit exactly what we're talking about. That market is going to bless you with a reversal bar. It's going to go in the direction of the trend, in the direction of the momentum. It's going to go in the direction of your trade. And you're going to reduce your risk a couple ticks above that reversal bar for a short or below for a long. And at this point, there's nothing to do. It's either going to get stopped out or it's going to run like a scalded dog, right? Your first profit target is only $100. And at this point, you either get stopped out or it hits your target. But if it hits your target, you're paid. The serotonin is real, guys. You're excited. You're getting confidence through the memory of success. And even more importantly, you're going to move your stop to break even, which means not only is there money in the bank that no one can take from you, you have nothing to lose at this point, which allows the brain to trust the idea that odds favorable momentum got you into this trade, to trust the idea that that path was clear. And you're just going to hold for that second target. And I'm going to tell you right now that break even is going to get hit a lot. And it doesn't sting very much, but you're going to learn how to manage it better as you learn to read your indicators. But if it goes off and it hits that second target, that $300 target, or $200 target, excuse me, 2 contracts, 2 targets, $300, guys. That is your foundation. Welcome to Nexgen. Let's study this for the next couple weeks together. Let's get it to where you can find that great entry, where you can manage your risk, and where you can have reasonable shorter targets in the beginning until your chart reading allows you to grab bigger moves. The idea is that you're going to do this until you get confident. You're going to do this until it becomes easy, right? And then eventually, I'm going to do it one more time. I want you to see Paul's chart. This is one of those pivot stop outs. And this pivot stop out, this termination, created a full reversal. And this full reversal provided odds favorable momentum. Notice that he didn't hit the red line. He came close, but he didn't. So he took a pullback directly to support inside of favorable large triggers. He took quick profits on his first one. He took quick profits on his second. And then his ability to read charts allowed him to hold for the third target. He was in at 0750. He was out at 1150, guys. That's a $400 move and a couple contracts in the middle as well. Does it work? Absolutely it works. Do you have to learn how to work it? Absolutely you have to learn how to work it. But doesn't Paul's picture look an awful lot like this picture? It can be easy. It can be simple. It doesn't have to be difficult. Stay focused on the best of the best. And if you do, life is pretty easy. So guys, there's your KISS trading plan. I'm going to drop that in the room as well. Please steal it. Embrace it. And if you're back with me after a little hiatus, if you're trying to get consistent again, maybe you got a little too big for your britches and started chasing everything instead of the best. We all do it. This KISS plan is designed to bring you back, to get you back to where you need to be. And then Paul says this one got him, right? So we're going to use Paul as an example here. Um, and I'm going to do it two ways. I want you guys to see something. I'm going to take a picture of each. And I'm literally going to take that same checklist that I gave you guys. On this long trade, is the market coming from a termination that creates a full reversal? Absolutely it is. Is there odds favorable momentum? Without a question. We hadn't reached the red fib. Love everything about it. And there's an area right inside of those favorable large triggers. Guys, notice that this is yeses everywhere. And it goes right to Fibonacci resistance. Now let's go to the one that didn't work. Is the market coming from a good top or bottom? We're going to say yes, right? We're coming off a resistance. Everything rolled. I love it. Do I have odds favorable momentum on both charts? I sure don't. This loss of momentum lets me know that the market isn't likely to continue in the direction of the trade. Anything can happen up or down. Do I have no termination conditions? Sure do. And notice that that area is falling outside of the trigger lines, guys. The areas for a potential bounce are beginning to get above those trigger lines rather than inside of them. And this becomes a no as well. 4 yeses, easy money. 2 yeses, 2 nos, it becomes a little more of a crapshoot. And guys, it's not a bad looking trade, but it's not a trade that has all those advantages. And if you break it down each and every time and you police yourself, this trade becomes easier to trust, easier to take. And I'm going to give you feedback on anything and everything. Every time you take a trade, we're going to talk about it. Every time you take a trade, we're going to look at the advantages. Every time you take a trade, we're going to look at the disadvantages. I'm not going to judge you on your trades, guys. That's not my job. My job is to help you learn to read indicators so that you can make a decision on what you will and will not take. When you write your rules on the chart, it lets me know what you will and will not take, and then I will begin to hold you accountable for the rules that you present. But my goal is that you begin to hold yourself accountable for the rules that you're trading, that you begin to police yourself. So you never have to ask me, hey, Mark, is this a trade? That you show me, hey, Mark, my rules were met and I took this trade. And if there was a challenge that maybe you don't recognize in the moment, we'll identify it. And maybe if there's advantages that you didn't recognize in the moment that could have allowed you to take a trade or to hold longer, we'll identify that as well. But every time I look at a chart, I'm going to revolve around these three. And the second one goes away, we go into a medium probability scenario. The probability of success goes down a little bit, not necessarily gone, but that's what we do. I don't mean pivot stop outs inside of lines, Dwight. What do I mean? Bounce is outside of triggers. I mean that the line, here, let me take the picture. You know what? I've already got the picture. That when, let's see if it'll just let me zoom the one. No, it won't. That when price gets back to that mid band, all the large triggers are below it, right? We're starting to fall outside. And we know through study, Dwight, we know through repetition, through seeing the same thing over and over again, that when they're nestled inside of these favorable large triggers, they're more likely to create a bounce. It's the combination of the lines and the triggers together. It has nothing to do with the PSO lines. It has everything to do with a solid bounce point inside of those favorable large triggers. And then when you take away the momentum, right? When you've got those anything can happen triggers, and then you had the same look on your smaller chart, you had those anything can happen triggers, you had divergence. That's when the market is more likely to continue up. You lose that momentum and you just don't know where it's going to go. Is it going to stop at this fib? Is it going to stop at this mid band? Is it going to stop at the fibs above it? Or is it just going to reverse? I just don't know, but I know that the advantage of momentum in an area inside of favorable large triggers is no longer present. And that's the one that's working its way up. Potential to break, pulls back to support, does not make it outside of the window of opportunity, and off it goes to the races. Pretty cool, right? Same thing. Let's see where this circle happened. Holy smokes. I could teach a class on that. So guys, that's my first hour. Over and over. We're going to talk about this over and over, repetition, repetition, repetition. I'm going to take 5 minutes. If you have a question, I want you to post it in the room. If you have a trade, post it in the room. And if you've never done either, so Michael and Travel the World, who else is brand new in here with me? You guys should have TechSmith Capture on your computer. And TechSmith Capture is how we have a conversation. TechSmith Capture is how you're going to post these pictures. Do both of you gentlemen have that? If you go to your search bar, can you find it? Because this is the most important thing that you can do. If you're serious about becoming successful, if you're serious about making $300 to $500 a day so you can quit that job and work in your underwear, guys, you got to post pictures in the room. And all you have to do is click this giant red button. And the tool is click and drag. I want you to go from the highest point of your large chart to the lowest point of your small chart and simply release your mouse button. Capture software asks you if you want to take a picture. When you say yes, it's going to give me a copy of it right here. We use shapes to talk about maybe termination conditions. We can use arrows to talk about trigger looks. We can use shapes for maybe where you get into the market. But the most important thing that you can do is click and drag, get that text box, and man, just start talking to me about what you see. Um, Give me the reasons why. Tell me what you see. And Michael, this is as you begin to learn things and you're really confused. It's like drinking from a fire hose. The more pictures you take, and watch this, you can just take it on one. And I love these pictures. These are my favorite pictures to get. So pull out your capture software. Give me a square right here. Create a box. And then just say, hey, Mark, is this a term? I see it broke, but the triggers didn't go, right? And let's have that conversation. And then what we do is we take this awesome picture that you post in the room, click copy, drop it directly into the chat box. And then what this does is it opens the door for me to open up the tutorial section. It allows me to come through here and talk about the areas that behave as termination conditions to reinforce what it takes to recognize one, to give you the advantage of understanding when the path is clear and when it is not. So we'll turn each of your questions into a lesson, guys. And that really is the magic of what we do in here is you guys drive the class. You guys tell me what you want to talk about. And then I just relate it all to chart reading. So that's our first hour. Welcome to Nexgen. It's amazing to have you guys. It's amazing to have you guys back. Um, I'm going to go take 5 minutes, stretch my legs, refill my water, probably high five my wife because it makes me smile. And when I come back, we're going to start looking at the pictures that you guys posted. We're going to revolve everything around the advantages that we discussed. But I want you guys to put me through the ringer today. If there's something that you want to talk about, I want you to get it in the room and I want you to say something clever like, hey, Mark, I need help. And it's tough to do, but once you start doing it, you get comfortable doing it, it gets easier every day. Guys, I'll be back in 5 minutes. Talk amongst yourself, post in the room. Be right back. It is a little bit. Gino, 12 steps to becoming a confident trader, but we've got 3. Back in a few, guys. Let's keep this party moving. What do you say? Does anybody see the termination that created the reversal that gave us a metric boatload of momentum? And I'll be darned, that market just keeps moving up. Pretty cool, right? Guys, we start the second hour. I'm going to show you. I'm going to scroll over in the chat box and I'm going to get us up to the top. And when I get up to the top, I'm going to start looking at the charts that you guys have posted. Remember that everything that I talk about, we're going to relay back to momentum. We're going to relay back to a clear path. And we're going to relate it back to areas inside of favorable arch triggers, or at least areas where the market is likely to continue. Just because I'm talking about those three advantages, just because I'm talking about high probability trend trades, doesn't mean that there aren't other ways to take a trade, that there aren't other ways to identify advantages and then take advantage of them. And Gino got us started today, and he was looking at the momentum, and he says because of this momentum, he wants to go long. He wants to get in a position that's a long position. And it's more of a jumping in kind of scenario, right? He gets in, and then price reaches that resistance, and none of the triggers break. And guys, this did become very much a stopping point. So this is making a decision. I've got momentum. I do have an uptrend, but there's not a lot of room to manage. And that becomes the challenge on trades like this, guys. Oh, Debbie, have a good one. Do you need me to grab your chart? Was it just the one? So leaving yourself room to manage the trade becomes imperative. And then Gino went into this understanding that this may reverse the market, said he got out for a couple ticks, which is a great way to do it. If you're going to trade into problems, it's nice to be able to know where those problems are. Debbie had everything down. Support behaves as resistance. She gets into the trade, keeps her stop where the market shouldn't go, and gets paid with the momentum down to the fib. I love it. And Debbie making the decision that she's willing to go against those four divergences because everything says down. The path is clear. And all of her charts still agree to the downside, and sure enough, it goes straight to Fibonacci support. Nice trade, Debbie. It's a little different take. It's changing things up just a little bit so that she's comfortable. And then let's see, who's next in here? Dun, 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 dun. Not a ton of pictures in the room this morning. Safia got us one. Safia loves momentum, and I love it because it starts with a termination. And she waits for her small chart to change direction. And when her small chart changes direction and gives all that momentum, beautiful execution and an awesome exit right at the trouble spot. Safia, love the management on that one. Beautiful. Not hoping to get paid, just getting paid right there at that trouble spot. Beautiful job. And then the same thing. This one's just taken that pullback off of resistance. Everything says down. Trading into a little bit of trouble, but trading with a ton of advantages. And once again, Safia collecting right at that point that may stop the market. Outstanding. And then taking that momentum style, letting the area clear and getting out at potential trouble. I'm telling you, Safia, you taking profits at the trouble spots, your charts look completely different to me. Like, what a, is it resulting in more money? I taught you not to hope. Hope kills me every time. It really does. Just take it because there's a million opportunities, especially when you read charts like you do. And can I tell you, the patience here was outstanding. You have matured so much as a trader. It's been a blast to watch. Um, Another reason I need you guys to stick around. I love watching you get better at this. Your patience has gone off the charts, and your ability to get paid at the trouble spots is outstanding. Look at that. Why hope? Just collect. Beautiful, Safia. Great trading. And then we saw Paul's the epitome of everything that we teach each and every day, right? Hoping you'll pass another 7, God willing. You don't have the speaker screen now. No, it's not normal. Michael, see if you've got a little drop down over here. That should get me in there. You can tighten things up and drop things down. And then when you click on it, it should bring it up. Let me know if that works for you. Does everybody have it? Or is it just Michael? I want to make sure that it's not just that everybody doesn't have it. Okay, you guys are good. Michael, sometimes you can reboot. Um, Everybody else is good. Okay. That was Paul. And when you take the perfect trade, more often than not, you get the perfect result. I love it. Chef, let's see what you did, my friend. Chef trading into that termination, but a pivot stop out, tons of momentum, beautiful entry, creates a manageable trade, and you're out at the trouble spot. Triggers were slightly past your entry point. I love it. No, just the room. Sorry, Michael. Just shut it down and come back in, and a lot of times that fixes it. Um, yeah, or use the pop out. One of the things, Michael, that there, well, you can't see it, so it doesn't work. In the bottom right-hand corner, there's a little box with an arrow that says full screen or return to app, and sometimes that helps. Chef, I love it. My brother and I were talking about the same look earlier. And guys, there's going to be times where you trade into Fibonacci areas. There will. And there's ways to make it easier. There's So this is a termination condition. This is a pivot stop out. Large triggers don't break through. They tried to get through, but they couldn't. And Chef, they rail it right down to support, right? Everything says down. Look at the momentum. This is your best. What's the reaction off of support? Well, of course, it's going to come back and probably look for those large triggers. Your entry is perfect. Your stop is where the market shouldn't go. And then, Chef, you know that it could go to resistance, right? Inside of favorable large triggers. So that's why your stop is above. Because those split triggers give a bigger window. Beautiful first profits. Chef, the only thing that I might say is that why on earth do you still have 3 points of risk on this trade? Because with all this momentum, this is where the market's likely to go, right? This is your only window of opportunity. This mid band right here. Doesn't it make sense that you could protect your assets a little bit and maybe go break even on the trade as you go into that trouble spot, as everything is pointing down, you've taken profits, no reason to give it back. No reason to say, oh, I'll keep $150 of risk on it when I'm up $300. Oh my gosh. So maybe next step there, right? Don't be afraid to move those stops. The idea is to get paid. The idea is to make money, always. That's okay. So where's an appropriate stop? Let's talk about management. And let's do it like that. If you got a pullback right now at this point, Chef, the mid band is your only area inside of favorable large triggers, right? That's where the market should continue if it's going to. So where shouldn't it go? Just above. Even if you don't go break even, you can still knock a point and a half of risk off that and still have your stop where the market shouldn't go. And that's one of the things. That'll be your next step. But this great entry sure did make it manageable. I think it's a beautiful trade. I think you absolutely nailed it. And then Safia, once again, she lets her trouble spot break and then takes the pull back to it and exits at the trouble spot. You know what, Chef? I think that's brilliant. You're doing more watching and less trading. I always say every morning, 90% of what we do is reading our charts. 90% is waiting for those advantages. And what you'll find is that maybe doesn't always pay as well as definitely. Maybe this mid-band outside of the triggers with two divergences and weakness, maybe it'll hold, right? Some of you love this trade, but is it going to be the mid-band or the one-to-ones or maybe one of these areas of support? And you just never know. And then Safia, the hope trade that didn't work, that's not 50-50. Safia, that is flat out termination. Oh, but all right, but let's turn this loser into a lot of praise. You posted it, right? You posted it and you said, Mark, look at this. I made a mistake. So let's look at it. The direction of the trend is down, right? And you've got a pivot stop out. That's beautiful. Pivot stop out, triggers down, everything down. The biggest challenge with this one, Safia, is look at that stacked area. Couple fibs, mid bands. You're on the wrong side of your super fast triggers at this point. They're already closing above it. I'm not sure what your largest chart said. Not one trigger line through here. Your plan, Safia, typically with this great top says let it break, pull back, and then go, right? So we missed one part of that. You forgot to let it get to the other side. And that's okay. It's a small loser, right? But it's a great lesson. And it just reinforces what you already know. That when, let's find it, that when you let the area break and pull back, you find success. And when you let the area break and pull back, you find success. And when you let the area, well, not be there and you trade the pullback, you find success. And when you let the area break and pull back, isn't that cool? That the patterns are there and somebody that trades as outstanding as Safia trades still makes a mistake every then. It turns out that she's human. We were a little suspicious for a while. But I think it's an outstanding termination that created the full reversal. And there was just that one little piece, right? And this is kind of the same look. Everything says down. The trend is down. And that was the exact same trade, wasn't it? If this is really going to end the trend, let it break with momentum and then pull back. It's pretty cool how you can begin to do that over and over, right? how you can give yourself these awesome advantages, how you can avoid these pitfalls that so many people that don't have the advantage of the software face. Knowing where the market is likely to stop. You know how many people went short into this area that held? Enough to make this happen on a large chart. They didn't know that rule number 2 wasn't met. And they were surprised when they got slaughtered on the way down, right? The same thing with the people that tried to go short at 41.81. They didn't realize that the large crowd created momentum against them, that the market was likely to push up. And they got slaughtered at each and every one of these fibs. And guys, I'm telling you, this is what my trading looked like when I started. Over here, I would get married to shorts. I'm going short, I'm going short. And I would go short right here, and I would lose. And then I would cry for a little bit, and then I would go short right here, and I would lose. And I would go short here at this red line because all the triggers were beneath it, and I would lose, and I would lose, and I would lose. And this is what we call getting married to a trade, right? Married to a trade means that you've decided what's going to happen rather than letting the indicators tell you what's going to happen. And I've done this move. And the worst part is there may have been 3 opportunities for longs if I just would have traded with the trend and I just would have traded with the momentum. So if you find yourself taking the same bad trades over and over, it means that you're trading that opinion a little bit. Vittorio, let me show you. And it's totally normal. I don't want you guys to ever beat yourself up ever for making mistakes. There you go. So you're going to right click and then you're going to edit account and then you're going to click reset. Here's your picture, Vittorio. Thanks, Chef. Has anyone else other than me done this? Weak triggers, multiple divergences, no areas inside. There is not a rules-based trader out there on your first 1,000 blown accounts. Oh, I love blowing up accounts, guys. I love that you guys blow up accounts because it means that you're out there trying, right? It means that you're trying to learn, that you're trying to get better. And so for Michael and Travel the World, what they're talking about is the days of having to spend your own money as a day trader are gone. The days of having to trade your own money are gone. You have to right click on the account, Vittorio. So you're going to right click on the actual number and then it's going to offer you the edit. And then from edits, that's where you're going to get under the general tab, the reset. Can you show me a picture of it? Take a picture of it. Let's see if we can figure out what's going on. I don't always have the answers, but sometimes if I see a picture, I can help a little bit. So for those of you that are new in here, guys, Apex is one of the accounts. Chef, you'll always be the queen for me. Always be the queen of blowing accounts. And what and what Apex does for you is they say, hey, new user, hey, person testing their plan, person that's gotten good on simulator and doing well, let me give you a proposition. And right now they're having a sale. So for $19 initially, I'm going to give you access to $50,000 of my money. And what they do is they say, but here's the deal. I want you to trade for 7 days, and I need you to make at least 3 grand. You can trade up to 10 contracts if you want, but we're going to make sure that you're consistent. We're going to make sure that you manage your money. We're going to make sure that you don't blow my money out. So we're going to have a trailing threshold of $2,500. And if you hit that 3 grand and don't blow out the account, guys, they're going to give you $50,000 to work with. They're going to give you what's called the funded account. And the funded account is going to allow you to trade their money. The funded account is going to let you keep 90% of um, what you make. They're going to take 10%. Um, but it's not like the old days when I started and I lost 5 grand in like 20 minutes. Um, Properties general. Did you right click on the actual account? So you're on properties, not edit. Yeah, thanks, Chef. So when you pull it up and you right click, go to edit, not properties. It looks like you went down here to properties when you wanted to be up top at edit. So these prop firms, guys, give you the opportunity to test your plan. They give you the opportunity um, to see if you can follow your plan. But it's amazing because when I went live, I didn't have that advantage. I had a lot of my hard-earned money in an account, but I didn't go through the steps. I didn't post pictures. I didn't. Let me pull up my NinjaTrader 8 real quick, Vittorio. I didn't ask questions. I didn't have a written plan. I didn't do any of those things that I encourage you guys to do. And as a result, I was separated from my money pretty rapidly. I'm pulling mine up right now. If I right click, my options are edit accounts. Here, let me get over here. Trying to not give away all my information here. If I right click on it, it says add simulation account and it says edit account. And if I click on edit account, this is what comes up. So properties general. And you're not getting this, Vittorio? Let me see if I can get to what you have. Properties. That's what it looks like if I hit properties, and that's not what yours looks like at all. Um, Name, denomination, commission, US dollar, none. Let me see if clicking somewhere else on it creates a different view. Vittorio, I hate to say it, I don't have an answer for you. You may want to go to Jason real quick if you need to. Mine isn't looking like yours, and I'm not gonna lie, guys, I'm not a NinjaTrader expert by any means. Let's try this. Reset NinjaTrader 8 sim account. That was some horrible, horrible typing. Here's a little 42-second video. I'm not sure if it has your answer, but maybe it covers something that we didn't take into consideration. So, weak triggers, no areas inside for the win, guys. Rules based. Everything about it's rules based. Can y'all give me a why in the room if you see it? If you see how there was no reason to hope, no reason to decide that you were going to impose your will on the market, right? But down here, if you had odds favorable, wish we would have caught this one live. That's pretty nice, isn't it? Safia, you traded into it again. I know you had a reason, but that was your first entry. Where's your second entry? Did I miss it? Is it hidden? I see the first one. Oh no, the first one was here, right? First one was over here. You let it come back to resistance with those weak ass triggers. Pardon my French. And then when everything sat down, because of the weak triggers on the second pop, it sure makes it easy. Haha. This is a great lesson. And that's exactly what it was, I think. Yay. Nice job. It's funny how letting it all agree. Nicely done. What do you guys think? Smalls below the large are wide, they're angled in the direction of the trend. There's a beautiful pullback to 82.98 that takes you all the way down to 78. And now we've got weak triggers, two divergences, and we're letting it sort itself out. Anybody go short in crude oil there? Anybody have rules met? Does anybody not understand why the rules were met there? Awesome. And guys, let me talk to you about something here. When we talk about termination conditions that create full reversals, we're talking about those coming from areas. And let me show you, whoops, sorry. I'm just going to chart read for a minute. When the market is not coming from a termination, when it's just kind of reversing in the middle of nowhere, guys, this is where I keep my eyes on the mid band. Whoops, wrong one. This is where I say, well, the mid band, even though the large triggers aren't a full bar away, I'm going to be a little suspicious because the buyers didn't reach their goal. So when the market comes from nowhere, the mid band is a place that I look at, and I'll still take the trade because it's beautiful. But when things start going south on a small chart, it's a great opportunity for management rather than hoping for the home run. Because really, what the buyers weren't able to do is reach that next key area. They tried as hard as they can, and look at how in control they were. The buyers have been cranking and cranking and cranking, and the sellers pushed them right back to the mid band. And this line right here, 8307, is going to give you a good idea of whether or not they want to get to that next area. Does that make sense, everybody? Not a termination that creates a full reversal. We have to be aware of the mid band and let the small chart dictate a little bit of change for us. And very often, if they do get above these areas, we're probably on our way to 83.67. Price of gas is going up. That's just a pattern. It's not guaranteed. We're in this point right here where we have to determine, we have to wait and be patient and see. Do they want to continue up, or is this resistance going to hold? I don't know, because my large are down and my small are up, and my synthetics are down, but my large are up, and I'm right into a termination condition. And I just have to wait a second. They'll tell me. I don't have to pay to find out. I can sit on the sidelines, sit on my hands, relax for a little bit, and wait to see what they do. You know what? My synthetics are not. I need to rebuild workspaces, Alex. I change mine up so often that I think I may have damaged them. It was a 50-50 there for you in the 8290? Yeah. Which just kind of adds fuel to the fire that two divergences kills it, right? Because we know that a 50-50 from a bad top has a less chance of success. Let me see if I can build a new 13-2, and maybe it'll give me those fibs. I think we did that yesterday too. I really need to just wipe this one out and start fresh. I'm building one right now. So we'll let that one come up and we'll see. And there we go, guys. Sometimes. No, that's the same, isn't it? Nope, it was 50-50. So I'm going to lose this chart. And I'm going to get one that gives me better information. And guys, this is one of the things, the more you mess with your charts, remember I change mine all day long for education. Now it has that potential to break. Two divergences said, maybe not. So we'll see what happens. And Safia, that's you being bored, trading directly into termination conditions again. Run a lap, Safia. You're feeling like Wonder Woman. Awesome. That's a great thing, though, to say, to throw that out there. Um, Guys, if you have a daily goal, reach it. And then go do something else. I reached my goal before class started. My wife's like, so you're done? I'm like, yeah, I'm going to the golf course. Yeah, you really do, Gino. Um, the hardest thing that you'll ever do as a day trader is absolutely nothing. I'm going to say that again loud. The hardest thing that you will ever do as a day trader is absolutely nothing. Hell yeah, Safia, I lose all the time. No. God, no. Nobody wins all the time. I can read charts, right? But I'm still very capable of being a dumbass. Let me see if I can find one of my losers. That's one I took this morning. I tried to catch the breakout. I captured profits and then I lost a little bit on the second contract. Yesterday, that was an easy winner trading with everything. Yesterday, these were easy winners trading with everything. But what you don't see on this one, whoops, they just knocked me out of Discord. Hold on just one second. I'll come right back. Guys, don't ever believe for a second that people win 100% of their trades. I don't know anybody that does it. Don't know anybody that does it. Let me see what mine was for today. I hit my goal today, guys. My goal is 250 a contract, and then I compound. But um, what you don't see, Safia, is I think I tried the long here and got run over and had to recover and change my thinking and go short. And that's your short right there. I learned that one from you. Let it break, pull back, right to the fib, and then re-entered. Pow, 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 pow. I know, right? You taught me that. You taught me how to do that. You guys don't realize this. I learned a ton from you guys. All right, so there's my day. And this was just pre-market before class. I lost a total of $440, but I'm up over my goal. I'm at 60% winners. You're gonna take losers, guys. But if you can win 60% of the time, it's hard to lose when your winners are bigger than your losers. Look at that. Potential to break, but didn't break. GWC. Yours is a termination that creates the full reversal. Perfect entry, beautiful management. No, I like your entry. I think it's perfect. You are right there at the bottom of the window with all that momentum from a termination. And man, beautiful management, GWC. Let's get paid at the trouble spot. So you're in at 95, out at 81. That's 14 ticks on 4 contracts. What's 14 times 4? 56? Is that right? It's a $560 trade over the course of 2 or 3 minutes. And it all revolves around a beautiful entry. GWC, solid trading. Termination, full reversal, odds favorable. Not high probability because it's not broken yet. So you take the perfect entry and you take the aggressive exit. Maybe GWC will be teaching class next week. And then look at that, guys. Divergences tell you sit on your hands and do nothing. The triggers don't agree. The path isn't clear. Look at them fighting it out, trying to figure out who's going to win. Travel the world, how you doing? How you feeling? Welcome to Nexgen. Michael, taking it all in, I hope. Guys, I call your names because it's important to me that you understand that this is your class. And I don't want you to ever be shy. And I also want to remind you that this is your first couple days in class. That's everything that I'm throwing at you, and that's you trying to take it in all at once. Convincing yourself that you need to be perfect on day one, because chances are in your chosen profession, you were probably kind of a badass, right? Michael, you're the guy with the answers, not the one that asks the questions in your job, I'm assuming. Everybody that I meet in this room, that's where they're at, guys. You're not, you should be. I'm going to write a letter for you. But when you get comfortable with what you're doing, right, it's going to become second nature. And if it's brand new, it feels a little overwhelming. I can tell you guys that that goes away after about 2 days. After about 2 days, everything that I say starts to make sense. After about 2 days, you're like, okay, I'm keeping up with him when he says trigger lines this, when he says Fibonacci that. So on your first day, just enjoy the ride. Enjoy the ride. And know that when a termination creates a full reversal, the full reversal gives you odds favorable momentum, and it pulls back. Where's your window of opportunity, guys? Dun, dun, dun. That was your highest point. That's your lowest point. If this market goes up, that box is going to be right on the tail, isn't it? Isn't that pretty amazing how that happens? And it's also not a good top. It's not a termination that creates the full reversal, which adds strength to the idea that they probably were trying to get to here, if not all the way up here, which just adds fuel to the fire to take that trade. I like that one. Termination creates the full reversal. They can't get to that next key area, pushes it back. Nothing to do here. Once it all sorts out, it starts to create a couple advantages here and there. That's one of those ones where you could have captured your 100. Maybe you just got stopped out. You're waiting to see what happens. Feeling pretty good about it, I hope. Running out of things to talk about for a minute. Nobody's posting pictures. Sophia's on break. Ron's got a chili dog. Resistance for the win. That's why we didn't go long with the green background, guys. Every trigger was below it. Actually, Michael, the European starts at like 2 a.m. Central. Pre-market moves without a doubt, but it opens at 9 a.m. and then most of the futures close at least for a small break around 3:15 Central. And then they start trading again, but they start trading with a lot less volume. Um, That was a pullback to support inside of favorable large triggers. May not win, but this is what we're looking for as new users. We're looking for that opportunity right there with the strong triggers. And then Michael, there's also the S&P that trades. It opens at 8:30, but pre-market moves a lot. We have people who trade gold. There's a reversal bar to reduce risk behind. We have people that trade the NASDAQ. We have people that trade the Russell. We have people that trade silver. We've got farmers that hedge soybeans. Their crops on soybeans. They literally do it. Look at the momentum pushing the market, guys. Look at where it pulls right back to support inside of favorable large triggers. There's our first trouble spot. We'll see if it goes through it or not. I'm not doing a very good job managing because I'm talking to you guys, but essentially, the large chart leads the way. There's your first target hit. Do we want to go break even and see if all that momentum pushes us to the next fib from this termination? So Michael, Travel the World, and the rest of you guys, does it work? Damn right it does. Your entry was even lower. Your break even should have actually been somewhere down here. But we can go break even on this trade. No worries, chef. But you see how the large chart leads the way. The large chart said we were going up. The large chart said we had momentum to the upside. The large chart said that we had a clear path. The small chart, and let me draw the box. The small chart in this one bar gave me a pullback to support inside of favorable large triggers. It gave me my first target. It hit the second target already if you were just looking for that $200. But I figured we'd see if momentum carries us to that fib. Because right now everything on every chart says up. Not willing to lose on this trade. Maybe if divergence prints, I'll exit. But guys, this is what we do every day. Do you see that $200 click on your screen? That $200 was your second target. You could have been out of this trade and paid. $300 in your wallet. Chili dogs, there's 200 again. There's 212. There's 200, 212, 225. And that market goes right to Fibonacci resistance. Target filled. Can I get like a yes or an amen or a hallelujah or something? Because guys, it doesn't get any better than this. This is what we teach every day. So Michael, this is every day. All you have to do is learn how to recognize this so you can take advantage of it. And I'll tell you guys, it's daunting to get on simulator in the class because 7 days is your demo, right? Yeah. I'm going to tell you right now, Michael, you're not going to be a professional day trader in 7 days. But do you know what you are going to do? You're going to understand that what I'm saying works, right? You're going to be able to go back and test it. You're going to be able to run it through the ringer. And you're also going to get an idea of how we teach here at Nexgen. You're going to recognize that every day you're going to have access to live feedback, that we're not selling you something and promising you that you're going to win 100% of the time. I'm going to tell you, you're going to take losers, but you're going to be able to manage your losers and you're going to be able to manage your profits. It's the greatest elliptical in the world, Michael, but if you don't get on it and make those pedals turn, it's going to be useless, right? So take the tool, learn how to use it, and then commit to studying. It's a fun ride. It's a good time. And I can tell you that a lot of the people in the room that you see taking outstanding trades. Oh, GWC, you took the same one. I was like, that's not his short trade. But GWC has been with me for a few months now, right? Termination. He talks about the same thing that we talk about. Odds favorable momentum, clear path. Look at that entry, like a sniper. So it's not just me saying that it works, it's GWC showing you that the recipe never changes, whether you're going up or down. It's just a matter of waiting for the right spot. It's just a matter of getting in where the advantages are present and doing absolutely nothing when they're not. Paul reminding us that it can be done. Chef reminding us that it can be done. And it can be done with the exact same rules. And now we're 50-50. Now we're small triggers through and large triggers not. So it's funny. I've got a lot of conviction, and I sometimes get cocky, and I tell people, go find something better. My brother will buy it for me if you find it. John Novak's always said that. He will, if you find something better than what we do, tell him. He wants it. And that's okay. But it's just like anything, right? You've got to learn how to use the tool. You've got to get in there and you've got to be able to do it. This area has the potential to break, but the large triggers haven't broken, which means that if you took a 50-50 shot, there shouldn't be a lot of risk on that trade because the window of opportunity is tiny. Bad bottom, pulls back to resistance, goes straight to support. Guys, this is the same look. Right to support and absolutely no trigger lines through. Nobody's going short here. That's an area likely to stop the market. If you're going long on the 50-50, that's it. Some people will wait for a reversal bar for confirmation. Guys, I'm going to take a few minutes again, and when we come into the last hour, I want you to post some questions. I want you to post some pictures. If there's anything that I can talk about for you, let me know. Otherwise, I'm going to go through all the tools that I have that I think are helpful, and I'm going to pass them along to you. But I will be back in about 5 minutes or so, and when I come back, we're going to finish strong. All right, guys, let's get into that last hour. Is it just me, or did that 50-50 trade with no divergence from a good bottom pull right back to support inside of favorable large triggers? And it made it all the way up to that $300 target before divergence spoils the party. All right, Gino, let's see what you did, my friend. Got long at 41.87. I love it. Gino, picture perfect. Isn't that easier with a clear path? So glad you took this trade. 87, huh? This is one of the things that you have to go through in the learning process, right? So Gino, can we compare this one to the one that you traded at first? Or the one that you gave us first in the morning? Watch this difference. No clear path, not from a pullback, made a tick or two. From a good bottom, odds favorable, nothing in the way, traded the pullback, easy, easy money. Gino, outstanding. That's what we call one-day progress, but I want you to celebrate that victory. Don't make me be the only one celebrating the victory. Um, that's where you go from, I think I got this, to, oh yeah, that's the one. And then divergence on one of those 50-50s. Divergence on the medium probability trade could create problems. And a lot of you guys trading the KISS plan don't take that trade. Termination condition. Look at the bounce. I want to talk about large chart, small chart, right? Look at those just a couple bars. That's everything over here. Let the large chart lead the way. Let that broad stroke of the brush tell you what's going on. Let the small chart define your entry when the rules are true. Isn't that crazy though? That's a lot of fluctuations on a small chart. What a great way to find the perfect entry. Anyone other than me take small chart trades and ignore the large chart? I sure did. I used to take this short all the time right into termination conditions and get slaughtered. Ugh, hated it. Didn't hate it enough to stop it for quite a while. Gary, 50-50, first entry is perfect. Money at the fib, perfect. Divergence prints, no reason to risk it. Gary, outstanding management on a 50-50 trade. Can you guys see that? Odds favorable, from a good bottom, no divergence. Look at that entry. It allows him to get paid at the fib, and then when divergence prints, it gives him a no-loss exit. 2 grand. Gary, beautiful. Are there any losers in that 2 grand, Gary? Of course. Safia, everybody loses. I think it's important that you guys know that. Losses don't mean anything bad happens, it just means that you're not in. That's okay. Guys, loss of confidence happens too. Loss of confidence happens when you don't trust your rules. When you think losers are because of you. How egotistical, right? To believe that you control the market. We don't control the market. Michael, you've already started, my friend. Let me introduce you to Norbert. Ron named him. This is the guy that's in charge, guys. This is your large chart. The large chart is the shark. It's the big money investors, it's the institutional traders, it's the people that create the trends, the people that establish the momentum, the people that react to those key Fibonacci areas that you guys have the advantage of knowing about. And I always say, let's be remoras. And if you're not familiar with the shark-remora relationship, the shark does everything. The remora just swims by him and feeds off of whatever he eats, right? Shark eats a tuna, Remora gets a chunk that feeds him for a week. Shark eats Surfer. Remora gets a chunk, keeps him fed for a week. Guys, this is the relationship, and this is the advantage of what we do, is we never have to be first, right? Rod, we never have to hope that an area holds. We can literally let it hold. We never have to hope that the market's likely to continue. We can use strong triggers to determine. And I think one of the most important things that we do is we never have to hope that one of these key area break. We can literally let it break before we take a shot. And if it's going to break, both small and large are going to get through the area, right? And the smalls are going to get below the large. And everything's going to push down. And we're going to look for a pullback right to resistance, right inside of those favorable large triggers. Nothing like a real world example. And it doesn't mean that this trade is going to win. It doesn't mean that I'm going to be rich beyond belief. But what it means is that I have a statistical advantage, that I have the advantage of momentum, that all of my triggers have cleared support. It's now behaving as resistance. And if they decide to give me a pullback, I can define without hesitation at a moment's notice where it's most likely to bounce, which means not only have I identified a window of opportunity, I also know exactly where my stop needs to go. If I get filled at 82.70, my stop's going to go around 82.79, 82.80, right there about 10 to 12 ticks, about $120. But you see how quickly the analysis can happen once you study it a little bit. Are my rules met? That's the only thing that I ask myself, guys. I only have two options every time I activate a limit order. If its rules met, the limit order gets activated. If its rules not met, the limit order does not. So you have to have rules, right? You have to have a set of rules that identify your entry. And it tapped it and didn't fill it. And it tapped it and didn't fill it. It's messing with me. Is it going to go without me? Did you guys watch that? It hit it twice. Hit it twice and didn't fill the order. I'm going to laugh if it goes without me, but it's okay. That just means that it's not my money. Does it make sense exactly what I did there? Why I did it? What made me? It's just because my rules are met. And if I take this picture and I put that checklist on it, is the market coming from a good top or bottom? I don't remember. Do I have odds favorable? Absolutely. No terminations, area inside. Guys, that is my obligation to my plan, to take that trade. And they're just messing with me here, aren't they? There we go. Where the market should continue, where it shouldn't go. If this one's going to work, it should never make it up here to 78. So now my only option is either it hits my first target, which is $100, or it hits my stop. If it gives me a reversal bar, I'll reduce my risk dramatically. I'm not making this happen, guys. I have zero expectations on this trade. I know that I have advantages, but I don't move the market. Well, it hit my first target, but it gave me the reversal bar. So at this point, I have 4 ticks of risk. This market keeps hitting my stuff and not filling me. Did you guys see that? I'm powerless. And if it comes back and hits my stop, well, that's cool. See it. You lived it. Well, there's my first target. Should I go ahead and go break even? Now I have zero risk. I have money in the bank, and I have a $200 target down here, guys. And if it hits it, outstanding. And if it doesn't hit it, eh, I already got paid. There we go, guys. That's two high probability trend trades live. I want you to grab your checkbooks. This is what we teach every day. I'm sorry, that's 32 flavors of kick-ass. Because this is the trade, guys. Let's see some pictures, Nexgen users. Don't you dare talk yourself out of this one. Michael, so all we're going to do is we're going to take the rest of your life to get you comfortable. You won't need it. Travel the world, all we're going to do is get you to where you're comfortable. And then, do you guys see how the tail is the pullback to resistance? I didn't handpick this trade. Guys, this is crude oil live. Is it just me? There it is going up. Winner, winner, chicken dinner. There it is going down. Winner, winner, chicken dinner. Hey guys, look at that. We took two trades together. You're up $625 on a two lot. What if you pull off two trades? What is that? 3,100 a week? 12,400? 12,000 a month, guys, on two trades, pulling stuff like this. I don't make it up. I don't need to. Safia, let's look at it. I don't know what you did, Safia. Rub the Buddha. Oh, I helped you correct your mistake, and this one had hope, had no hope. Safia doesn't annotate anymore because she knows that I know what she's doing. So let's look at it. That's that termination. She lets everything roll and break the one-to-ones, and when it pulls back with that momentum from the termination, she takes it to the fib. Beautiful, flawless, 100% per her plan. Isn't that awesome? That's all it is. Rinse and repeat, guys, until it's comfortable. Rinse and repeat. Absolutely. Thanks for being such an amazing student. Alex G. Ah, love it. Beautiful. Everything says down. The market goes down. Money, money. That's the goal, isn't it? Let's get paid. It's easy to trade on hope. It's easy to want to do all the things that don't give you an advantage. Look how the market's dancing there. There's nothing to do, guys. Areas break. But if you traded to the area, didn't it feel good? Did anyone else catch that short? Anyone else get in on crude oil and say, man, hope is not a strategy. Hope's a girl I knew in high school, and she was pretty, but maybe a little bit crazy. Amen. Don't tell my wife I said that. Oh my gosh, guys, I enjoy this class so much. Me too. I enjoy this class so much because I love seeing what you guys do with the software. It's a real kick for me to see you guys taking the lessons that we talk about every day and turning it into life-changing results, right? Um, it takes a lot of patience to be a day trader because the reality is the market doesn't give you a statistical advantage every second of every day, and you've got to wait for it. Um, let's play this game where I start showing this stuff. Six signs you know you're maturing as a trader. This is my favorite. I think number one is the most important. Number one and number six. But number one is you manage your risk before you ever manage your reward, right? How do we manage our risk? We manage it. Gosh, it's like the Sunday school answer. How do we manage our risk? We manage our risk by being rules-based traders, by having the advantage of momentum and a clear path, and making sure that we're entering at the area where the market is most likely to continue, because this is the scenario that gives us the least amount of risk. And then from that least amount of risk, we're able to use that same momentum in these key Fibonacci areas for targets. Then we manage our reward. Guys, Nexgen is designed 100% to embrace this first idea so much. Being completely relaxed when you make trades. My palms used to sweat. I used to move my charts a lot. And guys, you watched me talk through two separate trades, two different markets, one going up, one going down. And I'm not going to lie to you, the calm in my voice is the exact same calm that I have when I trade now because I've done the study. I've gone through the repetition. I understand what I'm looking for. And I know it sounds kind of I want to win every one of them. Let me be honest. I want to win every trade that I take. But I'm realistic. I know that I'm not going to, so I insist on an advantage every time I take it. I don't force trades, I don't chase trades, I don't try to impose my will on the shark. I remain a remora. And guys, there's zero adrenaline in my trading now. Adrenaline comes from hope, from fear, from indecision. There should be none in your trading. And if you're still chock full of adrenaline, then you're still in the building trust process. And this is the one. Follow your trading plan. You follow your trading plan. Um, just because you're maturing as a trader doesn't mean that you follow it every time, but you follow it more and more. Safia, you've shown me, I think, 7 pictures today, and 6 of them followed your rules perfectly. One of them was a deviation. You want more. You do. You want to catch more. You get excited. But is it a coincidence that the 6 that followed your plans produced results? I always want to see more. And the one that didn't pulled from those great trades. So following your trading plan is a huge sign of maturity. And then guys, this embraces my hippie side. And I do. I even grew my hair out so that I could be a hippie. Your worth as a human has nothing to do with your worth as a trader. They're very separate. If you have a bad day as a trader, it doesn't mean that you're a bad person as a human. If you make a mistake, if you break your rules, if you hold too long or get in too early, guys, it has nothing to do with the wonderful human being that you are. Remember that. Don't beat yourself up. That's one of the biggest things traders are inclined to do is just rip themselves to shreds. So make sure that you talk to yourself the way you would talk to the person that you love most if you're teaching them to trade. And don't let yourself get away with being an asshole to you. There's that area likely has the potential to break with momentum. Notice that support became resistance and it pulled right back to resistance inside of favorable large triggers and down it goes again. That's your problem, Dwight? Guys, I'm telling you, have you ever noticed that I've never called any of you names, that I don't ever tell you that you're stupid for the mistakes that you make? What a horrible teacher. Would you stay in my class if I did that? I hope you wouldn't. I hope that you would fire me. I hope that you would say, you know what, Mark? That's inappropriate. You can't do it. And I'm not going to stand for it. Put your foot down on yourself when you find yourself doing that. Negative speak is so damaging. Um, so damaging. Awesome. I'm glad you're enjoying it, Michael. Um, I'm fiercely passionate about what I do. I really am. I love teaching. Teaching is my passion. I went to school for an English lit degree with a minor in secondary education. My whole goal was to be a teacher, but teachers don't make any money, and I like making money more, which is why I'm a chart reader now. Um, I like to share this one too. When you stop expecting to win every trade, you'll start winning more of your trades. Um, Not worrying about the results, care about the execution of the method because that should provide an advantage. That should have been proven over time to win more than it loses. And if the execution is right, then the results should follow, right? And it doesn't go the other way. You can't want to be rich, but not go through the process of getting there. Um, Teachers are making huge money, vacations, pensions. Right on. I like that. I think teachers deserve huge pensions. I've got a friend that's a teacher in Orlando and can barely make um, ends meet. She's got an MBA. She's got an MBA. She's brilliant, but she teaches punk high school kids and has problems every day. Not for teachers, Shogun. Definitely not for teachers. But the flip side is the medical profession here makes an awful lot more money than they do there. So, and you guys have Banff, and that was amazing. That was my one of my favorite parts of living up in the Pacific Northwest was going to Banff. Guys, I'm just sharing all the tidbits that I have right now. To minimize your learning curve, post pictures in class, every trade, every day. Weak triggers, nothing inside of favorable large triggers. Don't trade hope. Is it going to be this line or that line or this line or that line? I don't know. Guys, you've got to post in the room. You've got to break out of your shell and be comfortable with being wrong in front of a crowd of people that you will never meet. Um, the idea is that we want you trading the right rules. We want you focusing on the best of the best, making sure that you're not creating long-term failure. And that really is what we do in this classroom, guys, is we give you the tools that you need to be successful, and then we work with you every day until you can use them effectively. What else do I have? My favorite one, Sophia's favorite one too. Experience versus time, guys. This is going to be your journey. Michael, you're right here right now. This looks like fun. And it does look like fun. And then about a day into it, you're going to be like, I got to learn stuff. And that's okay, right? Because being a student can be fun, guys. It's fun to learn new things. And then you're trying to put it all together. And you're like, I don't know what I'm doing, but I'm going to keep doing it because I see the potential, right? I know that there's a potential to make a lot of money if I get good at this. And right about 30 days, I think that's where I hit. 30 days, you're like, I am the smartest person ever. And I don't need the checklist and I don't need feedback from Mark and to hell with not fighting the trend. I'm brilliant. Have you met me? And this is where people go live too soon, guys. This is where I lost 5 grand in a matter of hours. This is where I lost $5,000 in 21 trades. 21 trades, and I didn't have any idea why I took them. And this is where you go back to, and just forewarned you new people, I'm not afraid to swear a little bit every now and then. It comes with the English Lit degree. This is where, when you haven't gone through the process, when you haven't posted pictures, when you don't have a plan, when you haven't taken the time to learn it, you typically get knocked back to the I don't know shit stage. Um, and then just for my new people, guys, everyone raise your hand if you have found yourself at this stage. I did. I almost quit. I was mad at my brother for getting me into this. I was mad at my brother for my $5,000 loss. I felt entitled to win, but I didn't do anything to earn it. I didn't have a plan. I didn't know what my rules were. I didn't study the looks. I never asked for feedback. I didn't take any pictures. I felt entitled to win. And guys, I got knocked back to this one, and I got knocked back hard, and I almost quit. And that's when my brother called me on the phone. And he said to me, like a brother does, right? He goes, Mark, I value you as a brother and you're important to me. And no, he didn't. He said, hey, dumbass, I told you to post your trades in the class. I told you to take 10 pictures of longs. I told you to take 10 pictures of shorts. I told you to write down what it's going to take to get you in there. Why on God's green earth do you think you are so much smarter than the system that's been working for 20 years? So I said, all right, my brother might be onto something, guys. And I followed this path and I followed this plan. Um, and I got to the, it actually makes sense. And every one of these was this horrible pitfall that I found frustrating and dejecting. And I don't like to lose. I'll tell you right now, guys, I'm competitive and it pisses me off if I'm not good at something. But I survived this, and then I followed the plan. And it was right about here that I met a lot of you guys for the first time. I used to teach a 101 class. Because I had gone through the problems, because I had fallen in those holes that I'd made for myself, I asked John, I said, John, can I teach a 101 class? Can I teach it remedial? Can I focus on the basics and the foundation and help people not get the mistakes that I made? Help people not fall into that trap. And a lot of you guys that are in this classroom are getting the benefit of my mistakes, very much so. And then you get to the I did I do that, and you end up at I did it. And when you guys get to I did it, I'm so stinking proud. I really am. But this is where you make a decision, guys, and I want every one of you to be okay with the idea that you may end up here at some point. But this is why we're on Simulator, right? This is why we do this with Monopoly money. This is why being able to utilize one of these prop firms and test your methodology on a simulated account with them and use their money rather than your money. You can open accounts later if you're consistent with them. Um, it's gotten so easy for you guys at this point, but this is going to be your path. It's pretty normal. Weak triggers and multiple divergences and no areas inside a favorable large trigger said don't take the short. You had rules for that, right? But on the same token, odds favorable clear path and a pullback to resistance inside of favorable large triggers said don't you dare miss the short. You had rules for that. Now we're just going to get to where you want to be. And it's going to be fun. And it's going to be exciting. D-Rock, you say this was a tough one. Because it pulled back one, right? Because it came back. So what do you say? So check it out. I like it. And let's talk about the growth part. Can we do that, D-Rock? First of all, I love the quick profits, right? Getting in there, getting paid. Where did my snag it go? I lost like half of my stuff over here. Here we go. Oh, that's because that's your... That was your computer, not mine. That was funny. So D-Rock, we talk about management super pragmatic initially, right? Quick profits, break even, or just below the bar. And I think that you followed that 100%. And I think what you did there was solid. So now let's go back to it and let's look at it from a growth standpoint. Are you ready? You're going to love this. When this one divergence happened with all of these advantages, it's okay to create another window of opportunity, right? It's okay to say it's still a high probability trend trade. It's still rules met. This is still where the market is likely to continue and where it's likely to not continue. Your next step, D-Rock, will be, even if you get stopped out here, to retake it, right? Your next step will be like, with this many advantages, my stop is going where the market shouldn't, because even if it dances around, it's more likely than not going to hit that next area. And that's the next step. Yeah, that's the next step in it. So, D-Rock, what you do is you take this exact same picture, right? And re-annotate the chart. So we'll take this one and we'll go with all rules met. I'm willing with smalls outside of large on small chart to hold my original stop. Original. I can't spell today. Because the rules for a high probability trend trade are still met, right? Or something clever like that. And then you're going to upload it to Screencast and you're going to drop it in the room and you're going to say, Mark, I want you to have I want you to see this revelation that I had. But then D-Rock, your job is to take that perfect entry and go to your favorite looks and drop it in management right here. Turn it into a hyperlink and say when to not move stops. And you're exactly where you're supposed to be right now, right? You're following a very pragmatic plan. But what you're going to find is that every manageable trade or every great entry creates a manageable trade. This great entry and this trigger line says let's hold for more profit, right? Um, this great entry and these great trigger lines say let's hold for more profit. So your very conservative approach turns into um, just opportunities, right? And this is one of my favorites. Don't put your exit in the window of opportunity when the large chart looks like this. And that's exactly what happened here. Yeah, this is a good one. This is the second half, and this is why I always encourage people, focus on your entries first. Focus on those great entries first. Because once you do that and you begin to capture profits, you're in a position where you can start recognizing things in the moment, and it's going to create opportunities to make more money. Man, you are at the beginning stage, D-Rock. You are literally 40 days in, 45 days in. You're a baby by trader standards, but you're already nailing entries and you're already collecting profits. And now it's just a matter of refining and getting better every day. And that's what I love about the class. And I noticed that you're catching winners and you're not in here anymore. But I appreciate that you come back because there's always going to be lessons. Whether you're on day one or day 100, there's always going to be an opportunity to learn something. And I'm telling you guys, when I look at your charts and there's absolutely nothing moving, it's so easy for me to have a conversation about it. But you see how your stop is still right inside of the large triggers? Couple ticks, man. Couple ticks changes 62 into 620. Hindsight. But we're going to use hindsight to look forward. It's fun. I love it. I get excited about it. I really do. Because I know the potential in the software. All of you are. That's why I say celebrate victories. Make sure that you recognize the fact that you're getting better. Make sure you recognize the fact that things are going well for you. Um, so we'll be good. Oh, Ron, you're still learning? Goal met before class? Me too. I enjoy it in here too. Did you guys know that my brother will be teaching on Friday? Um, my brother is going to take the room on Friday. He's got some stuff that he's excited to share with you guys. It really is cool. We're cool. But John Novak, the guy that wrote the software, so Travel the World and Michael, this is huge for you. He's going to come in and he's going to talk about a lot of the chart reading. I'm a good chart reader. I'm solid with my chart reading, guys. I'm super comfortable and super comfortable teaching it. My brother teaches me something every day. My brother teaches me something every time I talk to him. And I'm telling you, I talk to him for 2 hours before I come talk to you guys. And every day I get better because of his tutelage. So I'm excited when you guys get him because there's always something. There is always something. And it's fun. That's okay. Hopefully, I'm going to use Friday to move. I'm still waiting on this. It's hard to get into a house when you want to rent, which is crazy. Thanks, Dwight. You are too. I've seen your reads. I've seen your reads. Guys, look at this caught between fibs. That's where the money's made, guys. In between the decision-making areas, right? That's where the money's made. Not yet. We're gonna rent for a little bit, D-Rock. It's funny. I love the idea of taking somebody's nice house and not having to pay for plumbing issues or AC issues or flooring issues or flooding issues. And it's typically less than my note would be. So I think what we're going to do is we're going to rent in Dallas, and I'm going to buy land somewhere between Dallas and Austin, and I'm going to find 20 or 30 acres, put a couple chickens on it. So that's the plan. We'll see what happens. Plans change. I'm ready. I'm excited to settle down, though. For those of you that don't know, I've been traveling the country for the last year and a half, I think. Buffalo are huge. I don't want to be near a buffalo unless it's on my plate in between two buns with a little ketchup, maybe a pickle. Did anybody notice that we got three divergences in the same location, same price range, identifying change on the large chart, and off it went to the races? Guys, it's been an outstanding day, but I am really kind of running out of stuff to talk about. I'm going to give you a book. If you are still jumpy, Emotion-Free Trading is outstanding. My brother gave me this one. I've read it 3 times so far, and really a fantastic approach to just good habits, loving yourself a little bit. And then 7 Habits of Highly Successful Traders is kind of on that same vein. Good stuff. If you go to Nexgen's YouTube page, under videos, if you scroll down, wow, it's way down there, isn't it? Maybe it's on the home page. Hold on. Under the home page, the Mark Douglas playlist is pretty outstanding, working on the psychology of trading, reminding you that you're not in charge. And I love that. And that's one of the biggest things that the Mark Douglas does is he assures you in no uncertain terms that you are not in control of the market. That when you get emotional, it's because you believe that you had a say in what's going to happen. And it's just not the case. So, anyway, what would you guys like to talk about? I'm out. I'm out of stuff. I'm looking. I'm looking in my pictures. Anybody have plans for the afternoon? We've got some sunshine here in Austin, Texas. My last outing. at the golf course was so horrible. I'm not sure I want to have another one. Take my slingshot. Out here, it's for the deer. Yeah, I know, Gino. I do. I do. I'm at the point, guys, so in my golf game, here's a great analogy. I'm at the point where I know what to do, but I have trouble putting it all together at the same time. Um, I understand the mechanics, but I forget something every now and then, or I go through. Like this is my birdie over here, but I have to do all this to get it, guys. Your trading is the same way. Once you learn the trend and being able to identify the trend, and this took all of you a fraction of a second to do, then you're already a step in the right direction. And once you have that trend, guys, take a day or two, focus on identifying momentum, scroll back on your large chart, and just take pictures of the best trigger lines that you absolutely have. And then start identifying termination conditions. Get to the point to where you can see them in the moment rather than historically. This may take some of you a day. It may take some of you a year. If you're me, you're on year 73 and you still believe that they're going to break for you from time to time. And then just refine it down to that entry, right? One step at a time. Don't be in a hurry. Don't rush it. You can't rush it. You can't make your brain grasp something at your rate. It's going to do it at its rate. It's going to tell you when you're comfortable with momentum and it's time to move on because you won't think twice about it. And it's going to tell you when you're comfortable with termination conditions because you won't think twice about it. And you'll get to the point to where you'll do exactly what we did with this one. You'll be so calm because you identified everything that you needed to identify, and you'll be so calm and it becomes easy to hold and you revolve around advantages. Every day, because all you have to do is post a picture. And then you and I will speak to each other right in the room. Everybody thinks that a one-on-one with me is the answer. I'm gonna tell you right now, guys, I have never done a private session, and because this isn't just for you. I've never done a private session where anybody has come to me with pictures with problems, where people have come to me with anything, honestly. All they come to me with is, hey, make me better. So, Kazillas, here's the beginning of the one-on-one session. Post trades in the room, guys. If you're not willing to post trades and get feedback, I can't make you any better. I can't do it. Learn the trigger line and the Fibonacci rules for when it's okay to trade. I do it every day. The first hour of every day. This is exactly what it is. And then you have to simulate and show me your pictures. Absolutely, D-Rock. You have to simulate and show me your pictures, and then we'll have a talk about it. So watch. Safia says, what do these arrows mean? It prints at the same time. When you get a breakout bar into the area, the white bar goes into the area followed by a reversal bar, it creates the signal. The signal means nothing if your rules aren't met. White bar up, reversal bar down gives the signal. That's all it is. But the flip side, Safia, is this white bar up is the same thing that creates a high volume area. So they're just signals. No, it doesn't. It just means that something happened in the bar. My brother could give you the complete inner working technicals of it. I don't know it 100% to do it, to be honest with you. All I know is that if my rules are met and I see one of those arrows, it means that I may enter the trade if I'm waiting for that confirmation. I think with your plan, you don't need these because I know your plan revolves around the trigger lines, not the actual bars so much. So, Kazulas, I suppose I could do a one-on-one, But can I tell you what my requirement is for a one-on-one? And I tell people this because this is I get salespeople going, "Hey, so and so said they would buy software if you do a one-on-one with them." And this is what I tell people: if you want to do a one-on-one with me, you ready? You have to tell me your rules. You have to show me 10 pictures of your rules being met. You have to show me 10 trades where you annotate the chart. I'll help you identify challenges. Do you know what never happens, guys? Nobody ever tells me their rules. They're like, well, I don't really have any, but I want to be successful. Can we have some time together? Nobody shows me pictures of their rules being met because they don't have rules. And then nobody shows me 10 trades that they took with annotated charts because they don't know their rules. So I always go back and I always default back. I'm going to give you rules. And even when I do this, when I give you the rules and say, show me 10 pictures of them being met, people don't do it. So what I have found, and I'm not opposed to private sessions, guys, but what I have found is, and I'm not saying this is you, Kazulos, the average person that wants a private session doesn't want to do the work. They want me to magically fix them behind the scenes, and it just can't be done. I say the same thing in a private session. I talk about the exact same advantages. I talk about the exact same rules every day. Um, and then when you come to me with a chart, we just analyze it the same way I did for D-Rock, right? D-Rock didn't need to be in a private room with me to get that feedback. Okay, so show me a picture and draw arrows and say, Mark, what does this line mean? I can fix you. Check it out. Here's your map. This is what every line is on your chart. Divergence highs means that there was a loss of momentum at a high. Divergence lows means that there was a loss of momentum at a low. Red lines are Fibonacci resistance. Blue lines are Fibonacci support. Mid bands are a moving average that run through the chart. If price is below it, it'll be magenta, letting you know that it may act as resistance. If price is above it, it's green, it may act as support, right? That's it. And then these yellow one-to-ones can be support or resistance depending on how the market is trading to them. Um, and then on top of that, and I love that you asked this question. Thank you so much for doing that. Under the glossary of common terms, there's how your one-to-ones are created. There's how divergence is created, what a reversal bar marker is. It talks about everything that we talk about in the room, breaks down every individual piece of what we look at. And all of that's cool, right? And it's important. But the reality is you just have to be able to figure these three things out to be successful. Um, so Kazulos, take pictures. Do me a favor, start participating in class. I promise you, that's all you'll need. One-on-one won't do you any good. There are a million videos to look at if you want to. This is a great one because this talks about everything that we look at in this video. Start with this one. And then if you have any questions about it, bring those questions to class. But that's 11 minutes talking about everything that you're going to see, what we look for, why we do it. This will let you know what we do, and then this will let you know how we do. So I hope that was helpful and didn't feel dismissive. Sophia, have an awesome afternoon. Because I never want to deter you guys from asking questions, but I want you to do it in the right arena. Um, I'm here 15 hours live every week to do this for you. I know it seems crazy, but I'm a day trader after this class. And then after that, I have another passion that I spend 30 to 40 hours a week on, whether it's golf or art. Um, and I don't always have time to break up my day to sit on a Skype call with somebody for 2 hours to talk about the same things that I talk about in class. And I hope that doesn't seem selfish. Sometimes I feel like it is. But if it helps, in my other career, my hourly rate is $175 an hour. So come get tattooed and ask me all the questions you want one on one. Golf is art. It is. But I think that you can get everything you need in this classroom, and I think that's been proven day in and day out. And of course, if you have a specific question that I didn't get to in class, send me an email. I'll reply to you. I promise. I've never ignored an email in my life. I can't. I have a little bit of OCD. That little one pops up. We are on the conference call, absolutely. And none of you are sitting next to the other person, so it's a private session. This classroom is a private session, 100%. Firmly believe that. So that's it for me today, guys. Um, great day, great classes, um, awesome questions. I enjoyed it. I hope you enjoyed it. We're going to do it again tomorrow. We're going to talk about all the same stuff tomorrow. We're going to talk about advantages. We're going to talk about disadvantages. We're going to focus on entries. We'll talk about management. Um, I'm going to end it with just a little reminder. If you're not finding the success that you expected to find by now, guys, do me a favor. Grab hold of this KISS trading plan. One of the challenges that I put on people that tell me I can't find trades, I can't get in, I'm not making money. Um, which one, Gino? You think this is going to stop it? Gino, you don't think it has anything at all to do with the fact that we're into Fibonacci support and a divergence low and absolutely none of your trigger lines broken through? This one-to-one means absolutely nothing, Gino. Nothing. This one-to-one gave you a bounce back to that mid-band. That's it. This is the chart that says, wait a minute. Remember that. The large chart leads the way. None of your triggers are through support, but do you see how you just gave all the credit to a couple silly yellow dots on a small chart? Isn't that awesome? Large chart leads the way. This has nothing to do with it. This has everything to do with it. Does that make sense? Because if these trigger lines break through with odds favorable momentum, I'm hoping this one-to-one becomes an area inside of favorable large triggers to take a trade from. But rule number 2 says don't do it. I don't even need this chart to know that I shouldn't be going short. Thank you for posting that. That's a great lesson. It's not the one-to-one, it's the termination condition. Good stuff, guys. I'm going to call it a day. I hope you have an amazing afternoon. If you have sunshine, go and enjoy it. If you do some study, take some pictures, bring them to class. If there's anything I can do for you guys, don't hesitate. You guys be good.